For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Tensions reached a boiling point across the Middle East during the month of June in the year 2025 as the State of Israel initiated a sweeping military campaign involving airstrikes on Iranian nuclear installations and military facilities. This dramatic escalation reignited fears of a broader conflict that could engulf the entire region. As the geopolitical landscape grew more volatile by the day, investors around the globe responded swiftly. Oil prices experienced a sharp increase, signaling concerns over supply disruption, while global equity markets reacted with unease and heightened volatility. Amid the uncertainty, one segment of the stock market came alive. Defense and military-focused companies saw their valuations surge. Palantir Technologies, a data analytics and artificial intelligence company that has long served government and military clients, has become an increasingly critical asset in global defense infrastructure. Since the month of October, Palantir has been working through a strategic arrangement with the Ministry of Defense in Israel, supplying advanced artificial intelligence technologies tailored for battlefield applications. In the current climate of armed conflict and rising hostilities, these tools have become central to Israel's operational strategy. This collaboration places Palantir at the forefront of a new era in military technology, where software and data are just as essential as physical hardware. The company's core strength lies in its data fusion capabilities. Its platforms are designed to bring together disparate streams of data, process them at lightning speed, and generate actionable intelligence. These tools are proving indispensable, not just in the physical theaters of war, but in combating cyber threats and ensuring operational readiness across domains. Meanwhile, across the Atlantic, Palantir scored another monumental win. In the United States, the Department of Defense expanded its ongoing Maven Smart System contract with Palantir, raising the agreement's ceiling from $480 million to an astonishing $1,275 million. This significant increase reflects both the department's growing confidence in Palantir's platforms and the rising demand for advanced artificial intelligence solutions within defense operations. Additionally, the North Atlantic Treaty Organization's recent decision to adopt the Maven system gave Palantir stock yet another powerful boost, further solidifying the company's standing as a trusted partner in global defense alliances. As defense expenditures around the world continue to rise amid mounting threats and the proliferation of artificial intelligence applications, Palantir Technologies has seen its stock climb to the #1 position in the Standard & Poor's 500 index. This remarkable ascent has prompted both optimism and caution among market watchers. Investors are now asking, can the stock sustain this upward trajectory, or are growing risks lurking just beyond the horizon? The company's journey began back in 2003, when it was founded with a mission to support counterterrorism initiatives. Since then, Palantir has evolved into a leading force in the domains of artificial intelligence and data integration. Its flagship platforms include Gotham, which caters to government intelligence and defense clients, Foundry, a platform tailored for commercial and enterprise-level data analysis, and the Artificial Intelligence Platform, launched in 2023, which has seen rapid adoption across multiple sectors. These platforms do more than analyze data. They provide strategic clarity, regulatory compliance, and operational control to users operating in increasingly complex and fast-moving environments. Today, Palantir operates across 4 continents and serves a broad array of clients both in the public and private sectors. With a market capitalization of $333.7 billion, the company has firmly secured its position among the titans of the software world. Its stock has been on an extraordinary run, shattering resistance levels and posting a year-to-date gain of nearly 83%. On June 11th, Palantir's stock price crossed the $140 mark for the first time and has since continued its climb, now hovering above $144. This performance places it among the top-performing large-cap stocks globally. But when zooming out to consider the broader timeline, the company's stock story becomes even more compelling. Over the past 52 weeks, Palantir's stock has soared by 452%. Expanding the view to the past 24 months, the gains rise to 747%. And over a 3-year span, the company's stock has surged by an incredible 1,567.5%. These are not just strong numbers, they represent a rare and powerful trajectory that few companies ever achieve. However, such a meteoric rise comes at a cost. Palantir's current valuation metrics are steep by any standard. The company is trading at a forward-adjusted price-to-earnings ratio of 243 times and holds a price-to-sales ratio of 85.9 times. These figures underscore the high expectations baked into the stock price and raise questions about how much more growth is already priced in. Palantir released its earnings report for the first quarter of 2025 on May the 5th, and the numbers were impressive. Total revenue reached $884 million, marking a 39% increase compared to the same period last year. Adjusted earnings per share jumped by 62.5% on an annual basis, reaching 13 cents. Much of this momentum is driven by the company's artificial intelligence platform, which is gaining traction not only within government sectors, but also among commercial enterprises. Revenue from the government segment totaled $487 million, an increase of 45% year over year. Within that, revenue from United States government contracts contributed $373 million, also representing 45% annual growth. These figures highlight Palantir's deepening ties with critical defense and intelligence agencies. In its home market of the United States, Palantir reported total revenue of $628 million, which translates to 55% year-over-year growth. Particularly noteworthy was the performance of the United States commercial segment, which posted revenue of $255 million, up a staggering 71% from the previous year. The company also experienced a massive spike in bookings, which grew by 183% to reach $810 million. This represents the highest total contract value ever recorded in the company's United States commercial operations. On the customer acquisition front, Palantir now serves 769 total clients, reflecting a 39% year-over-year increase. These are not just marginal users. The company's top 20 customers, on average, now generate $70 million in annual revenue, a 26% rise from the previous year. Government-related business also saw massive gains. Palantir secured $1.5 billion in total contract value from government clients, including a significant new partnership with the North Atlantic Treaty Organization and expanded roles in the healthcare and defense sectors of the United Kingdom. As of the end of the first quarter, Palantir held $5.4 billion in cash reserves and carried no debt, reinforcing the company's robust financial standing. Given this performance, Palantir raised its outlook for the full year. The company now expects total revenue between $3,890 million and $3,902 million for the full calendar year, representing close to 36% year-over-year growth. Specifically, the United States Commercial Division is forecast to bring in over $1,178 million, reflecting at least 68% annual growth. Additionally, free cash flow for the year is projected to land between $1,600 million and $1,800 million. For the second quarter alone, Palantir anticipates revenue between $934 million and $938 million. These forecasts suggest that the company's growth story is still in full motion. Analyst expectations further underline this trajectory. For the full year of 2025, Wall Street analysts expect Palantir to generate a profit of 37 cents per share, which would represent an astonishing 362.5% increase over the prior year. That number is expected to grow by another 18.9% in 2026, reaching 44 cents per share. Adding to the bullish sentiment, Loop Capital recently raised its price target on Palantir stock from $130 to $155 while reaffirming a buy rating. The firm praised Palantir as a trailblazer in the field of enterprise artificial intelligence, citing robust momentum, exceptional tools like the artificial intelligence platform, and strong execution in both commercial and government sectors. Despite these glowing reviews, not all voices on Wall Street are in agreement. Currently, Palantir stock holds a consensus rating of hold. Out of 20 analysts covering the company, 3 recommend a strong buy, 12 suggest holding the stock, 1 advises a moderate sell, and 4 have issued a strong sell rating. While the average analyst price target sits at $104.94, the most optimistic estimate of $155 implies the stock could still appreciate by another 12% from its current level. In the end, Palantir Technologies has emerged as a standout player amid escalating Middle Eastern tensions, with its battlefield artificial intelligence tools now central to Israel's defense strategy and its expanded Maven contract with the United States Department of Defense, pushing the stock to the top of the Standard & Poor's 500 index. The company's platforms, including Gotham, Foundry, and the artificial intelligence platform, have driven significant growth across both government and commercial sectors. Palantir reported first quarter 2025 revenue of $884 million, up 39% year over year, with adjusted earnings per share rising 62.5% to 13 cents. United States commercial revenue jumped 71% to $255 million, while bookings hit a record $810 million. The company now serves 769 clients, with major contracts secured from the North Atlantic Treaty Organization and the United Kingdom. Palantir ended the quarter with $5.4 billion in cash and no debt, and it now expects full-year revenue between $3,890 million and $3,902 million. Loop Capital recently raised its price target to $155, but despite bullish expectations, Wall Street remains split on the stock's outlook. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.